Welcome to TradeTheNBI.com. This is John's reports for the 1st of September. Well, we ended the month, with a little bit of selling coming off of the pretty decent sized push, a classic 5-day move here. We're still positive, brought back all this pullback that took place so far in pre-market. We can see 53 from a NBI Magenta. That, as you can see, has not happened in quite some time. So pretty significant move. Still, don't forget those positive extremes. That will take back everything that has been made at this point. And we see NBI White also trailing with it. So plenty of short activity within this, but you're still being overpowered by bulls at this particular stage. Finally seeing short-term buyers sell off here on the DOC and the meeting of the magenta, green midterm buyers and cyan, which is that critical stage where shorts either overtake or bulls are able to sustain it. With this solid shakeout, probably best going to see some uh, light move in between there, unless bulls just completely fade out of this. And with short-term buyers fading a little bit, it may take until after the holiday for the new fund money to come in and start things off. But this was a strong recovery. Uh, to make the month look less bleak than it was, uh, which is about the best you can say of it. But we're starting to see some activation in fall trade and potential winter situations, particularly as it comes to oil. Of course, you had the latest jobless claims numbers, which is always an interesting one as they, continue to show this super strength despite very large numbers of layoffs. It's always interesting when you get those kind of bifurcations from reality to statistics. From an NQ standpoint, much stronger separation. So the NQ has been the strength within this one, but also you can see that mimic situation here on the DOC, and that usually is not tremendously bullish. The strength of the shakeout and that probably enough to help hold things in place for a little bit, but definitely puts that 50% as a target on any significant weakness. But you'd have to see a pretty decent fade off, and of course we'd see that intraday before it takes place. And again, the flight to Treasury is still continuing despite where rates are, and the fact the Fed has continued to suggest that inflation is still not contained or even in control. Though, as I pointed out from over a year ago, the Fed is probably talking more than they're really worried about inflation. They wanted to normalize rates, but they're still going to allow inflation to run a little bit higher because that's the only thing that really offsets the money supply issue that they really have been trying to drain. And you can look at the numbers, and they've been very successful at draining pocketbooks with the inflation that has taken place, and that was the idea to help limit some of that excess liquidity that had been built in with all of the previous easy money. It's going to still take some more time for them to accomplish that, but again, no reason to be jumping into treasuries with these rates when you know that it's got to move back lower again. And this is the real problem area now. You're peaking here with oil as we get in towards the fall, and the recognition is that it just isn't going to be enough supply, particularly in Europe and things like that. These problems are going to persist and have been exacerbated by the items we talked about the other day. And this poses a much more significant inflation pressure, particularly if we start to break out from this range, because now you're at the peak range of the last many months going into, well, even before the beginning of the year. So, not a good sign at this particular stage. Not any real reason for it when U.S. could certainly do what it did back out 2016 range, 2017, and that where you just turned on the spigot. But it's a whole different story. And of course, that's going to be difficult for them. Like I said, they can make these little pops to try and force short covering in that. But at the end of the day, Eurozone in a world of hurt, and that does affect S&P realities because the lower the exchange, the impact on S&P earnings is real. From a gold standpoint, we can expect to see that to continue. Right now, we have NBI White leading, so that's a little bit of softness with the DOC spread right there. But pretty hard to justify gold fading in this particular situation unless there's a significant market sell-off, in which case usually you get some kind of liquidation to cover that situation. No surprise here with NBI white lead, Bitcoin then returning back to the lows. And it was no surprise coming off the depths that it had moved to. We talked about it. You get the little pump and fades. It actually did quite better than expected. Usually you get to like the 23%, but you get the high beta moves and it creates a lot of drama. But at the end of the day, um, not that great from a cryptocurrency space. It hasn't been for quite some time. And despite the news things and the excitement, that's basically becomes just a speculation trade. And at this particular stage, even ETH and that continuing to look weak. And from the 50K standpoint, it was having a terrible time with my TS. Just from a data standpoint, trying to get updated indicator setups that I have put on there, but trying to work through that one. It took me forever just to get my charts back up. But at the end of the day, we had pretty nice buy configuration, pretty weak from an MBI short standpoint here on the white MBI staying below, and that constant read of strength with the DOC steel coming from a bottom reset category meant that the power was there. And of course, don't even have to talk about it because cyan under red is what? Always a buy. And maintain that, well, all the way through until just where it sold out. And that's what took the configuration. That was pretty decent because from the buy configuration was 44.45 and selling at 45.23. So just under 100 ES points there from that move. Pretty decent. The issue I have is that even within this one, if I try and do additional time range, which definitely have and saved, it just freezes up and doesn't load. From a intraday standpoint, so it started early on, and we had the little pre-pump, sold into that. That created the lows. They brought it back up middle of the day, only to see late day selling, and that continued. But here in post market, they've made new lows, cleared up the stops, and then just rallied it all the way back through. And that's classic behavior in the soft hours and Euro session. It's easy for them to manipulate that so that they can clear as many stops as possible and get rid of any of the weak hands as free money to them. Then they just move it on back through. So the challenges are really starting to expand, and I think that that's going to create dynamics both directions. Everyone who thinks that things just are going to slide off and go one way, it doesn't work that way because you have too many advantages to push people one direction or another and get new opportunities to both attack into a short and or long situation. So easy enough to see it from our standpoint from the 5K, 50K range and attack it accordingly. As always, though, I'll continue to update you on the Skype chat, and I want to get out the updates that I have as soon as I can figure out how to get that to function with the TS that is giving me some grief. But as always, though, trade well. We'll talk again later.